Welcome back. Well, joining us for our Farm Journal Insights this weekend, we have Dr. Justin Benavidez. He's the chief economist for USDA. A big week with USDA's Ag Outlook Forum. Dr. Benavidez, this is your first Ag Outlook Forum, but what is the biggest takeaway from your overall outlook on the ag economy, both for crops and livestock?
I think the big story for this year is that progress is being made. Obviously, we are not out of the woods in terms of cost of production, in terms of finding higher prices through new sources of demand, but we are making progress. We'll see cost of production moderate for the first time in several years. When adjusted for inflation, total cost of production will decline marginally, though certain producers are obviously going to see that nominal cost still go up marginally in the neighborhood of 1% on average. And we are still working very hard to, get out of what is really a 15-year discrepancy in that cost of production and price received for crops. And that's what we started talking about this morning. Is we've had some black swan events that have masked a long-term gap in cost of production and price received. And the way out of that is new sources of demand.
Yeah, so we've been talking about the headwinds just in the ag economy really over the last several years. You do see those headwinds easing this year?
That is what our forecast is saying. We have marginally increased prices for commodities on the year. So all of the corn, soy, and wheat complex forecast to have price increase by roughly a dime a bushel each. Marginal increase in price per pound for cotton, about 3 cents, from 60 up to 63 cents, and then marginally increased prices across the board for most of the other row crop commodities. Still some headwinds, obviously, like I said, cost of production not going down a substantial amount, but beginning to moderate, declining in real terms in some places. They're being outpaced by inflation for the first time in several years. So again, headwinds still in the forecast, but certainly beginning to make progress.
Yeah, at least that gives us a little hope. But let's look at the big acreage numbers, because you were projecting a 5 million acre decline in corn and an increase in soybeans, now at 85 million acres. But that decline in corn is about 1 million more than what the trade is forecasting. So what played into your acreage decision?
There's always discrepancy in forecasts, right? We're at very early season forecast numbers this year. A variety of factors are accounted for by the professionals at the World Board who live and breathe acreage and price on a daily basis. They're looking into factors, obviously the soy to corn price ratio, which is trending towards more bean acres relative to previous years. We're getting close back to that 10-year average of the ratio between soy and corn price, which trends towards a little bit more bean acreage this year when compared to corn. They obviously think about global stocks as well as domestic stocks and demand sources that can factor into total acreage choices based on what drives that ultimate price. And it really does boil down to where producers think that they will make the highest net return.
My last question for you, though. You mentioned the ag economy and your outlook overall, and it does sound like you think some of those headwinds will ease. But what do you view as the biggest wild cards for the direction of the ag economy this year? What are you watching?
I'm going to be watching closely to see what happens with the RFS debate as well as the 45Z rule. There is a rule coming out of USDA on flexible feedstock provisions that would augment the 45Z rule that came out of the Department of Treasury and provide those producers of feedstocks at the farm level with some incentive to increase the price of both beans, corn, and potentially canola under our 45Z rulemaking process. It provides a tax credit to refiners of those biofuels, and then that increases a derived demand for some of the biofuel input products, like I said, corn, beans, and canola. And then on the other side, thinking about what is the final outcome of the RFS debate? What does the RFS renegotiation or update that's happening on the Hill begin to look like? And that could really impact both the demand for corn and for beans, depending on where the RFS and that debate over E15 winds up going. Those are the two wild cards, particularly when you think about timing. If those changes and updates happen prior to planting, we could see a significant change in what the acreage forecast looks like, as well as what the price forecast looks like. And that could be distributed across the crop complex.
Again, that's Dr. Justin Benavidez, chief economist for USDA. All right, we need to take a quick break. And then we are following the devastation in the plains, massive wildfires just impacting a large portion of the plains. What is fueling those fires this week? It's a check of weather next.